Okay, I'm going to call the meeting to order of the audit committee for the city of Moab on March 5th, 2026. And do I need to do anything else? Okay. Okay, we're done. So, all right. So we've got a few things to go over that we can do before Ron gets on. Ron is our auditor. He's one who put together the report that was sent out. We have the report. I can go over the findings of the report, whether Ron's here or not. We did want him here, but I don't want to not do this meeting because he's not here. We do want him here for the city council meeting for sure. Council wants to hear from him. And we may even get him before we end this meeting. So, okay. So the first thing is the approval of the minutes. We have the January 22nd minutes, 2025. Just anybody who read those or wants to make a motion?
I'll make a motion to approve the minutes as written.
Okay, Tawny.
I second.
Need our seconds. All in favor? Do I get to vote? Do I get to vote?
You're not voting member.
All right. Fine.
3.
3 out of 3 then. Passes unanimously. We do have, what is this? Oh, so that's the minutes, item 3. So we have the annual audit. I'm just going to give you an overview really quick. Marcy's here. She can shed any light as well. But overall, the audit was a clean audit. It was unconditional. So they were able to give us a clean bill of health, so to speak. That doesn't mean we didn't have things that we needed to correct. And I'll go over some of those things right now and then talk about some of the things that we've done to put in controls to resolve these going forward. So they, on page 49 of the audit, he talks about cash disbursements. And one of the things he notes is that certain disbursements were originally coded to general ledger through the system, but later the coding of the general ledger accounts were manually adjusted with no audit trail. And as I understand this, what this means is that that we can't tell why things were changed or anything like that, or what the reason was for change or anything like that. So what the control is we're supposed to require proper authorization and approval for the recording of cash disbursements. So rather than me explain what we're doing now, who wants to explain what we're doing now? Do you want to explain it?
Yeah, so basically the issue was if we found an invoice that was coded to a wrong GL, we were going in and just changing the invoice so to the correct GL, but after it had been approved or after it had been sent, it hadn't gone through the proper approvals. So now if we find something that has a coding error, we're doing a journal entry and Michael approves those so that he can see so that there's a trail of why we've taken it from this GL and put it in this GL.
Yeah, so there's a short explanation. It says these were coded incorrectly. We don't just have an amount that went from one GL to another without any explanation. And those are happening. I signed one this week, I think.
A couple of them.
2 of them this week, yeah. Okay, so those are happening. That addresses the issue that the auditor noticed. Let's see. So that is in place. Let's go to what do we have next? We had an issue with, and I'm trying to find the page that this is on. The issue was with, and Marcy, you can help me explain this one. This one was, depreciation.
Oh, yeah. So the depreciation is, first of all, it's not a actual transactional monetary moving of funds. It's called a contra account. It's an asset account. And we just inadvertently overlooked budgeting the depreciation. So there was no monetary issues, but because we have to track what our depreciation is on all of our assets, we had not actually budgeted the depreciation. So we are now, it's on our radar. Every single one will be budgeted, and we did get it corrected. So the depreciation still happened. It just wasn't done through the budget process. So
Yeah.
very straightforward. And we had a new PTIF account, the storm drain one, that we just hadn't even put in the system. So it was brand new. But
So Tanya, you may remember the amendment that we did where we added the depreciation because it wasn't in there before. And we're putting together the new budget for this year. Depreciation is in there. We've added those to the places that they need to be. And I'll just go through the rest of the letter. So if you look at page, I don't know what page, this is page 63 of 65. This is a letter to the city that states that the auditors have audited us. They explain what their responsibility is, and how they go about what they do. Most of this is just explaining what they're doing. They do say that we do meet budgetary compliance. There were some changes that we needed to make. We did make those changes. The first one was state law requires the city's actual expenditure on any given fund not exceed the expected budgeted expenditure for that fund. And what happened here was the depreciation bumped these funds over, and I think it was it just one or two? He had three, but one of them wasn't an issue actually.
sewer wasn't an issue.
Yeah.
Water
And water.
Yeah.
So water and stormwater, because the budget didn't include depreciation when he put those in there, or water and sewer, whatever it was, because when he put those in there, it caused those budgets to go over. So he's saying we can't do that. We know that. We will make sure that we put in these depreciation numbers before. Next thing he states is that the city's actual expenditure, that's the same thing. State law requires that a city includes general fund overhead allocation as budgeted expenditure in the funds that is allocated for the overhead. And is this the future liabilities? Trying to see.
Future liabilities are in there somewhere.
Yeah. During the audit, we noticed that the city did not include the general fund overhead allocation as a budgeted expenditure in the parking and transit fund.
Oh, yeah. Ron's jumping on right now. He was having trouble with this.
Well, good. Well, that's nice of them.
That was just in one account though, not all of our accounts.
Okay. And the note is that we resolved this in the current year, so it's not an issue. Overall, this is a clean budget. We did have to make some changes. We'll let Ron explain what his perception is of this, and we can vote on it or ask questions.
There are some like in math, doesn't math in some spots.
Oh, really? Yeah, I mentioned those to Ron.
You see here.
He's going to be on in a minute. So. We stalled just enough to.
So page 3 on the.
And you should be.
Hello, can everybody hear me?
Yes.
Hey, Ron.
Hello?
Hi,
Oh my
Ron.
God.
Can you hear me? This is
Finally
Michael
made it.
Black.
I can. I am so sorry, man. I turned on my computer and it was all ready to go and then it just died.
Oh, no problem.
The whole thing went black.
I stalled for
So-
you for a little while, so we want you, if you can go over the audit for us, explain what you did, what the findings were, what we've done to correct them, and what the outcome was of the audit. We'd appreciate it. I kind of went over it really quickly, but we'd appreciate getting an explanation from you. And then I think we have some questions once you're done with that.
Okay. So really quickly, let me just grab the door really fast. Hold on just for a second.
Okay.
Okay, so really quickly, what we do as auditors is there's really three areas we look at. One is that the financial statements are materially correct and they meet accounting standards and they can be relied upon. The second one is that internal controls, we want to evaluate those controls to make sure that they're designed, that they're implemented, and they're working effectively. And then the third thing is that we're in compliance with state law based on the areas that we looked at during the fiscal year. So what I'll do is I'll just quickly go through kind of each of those three areas and kind of tell you what we did and our conclusions and how we came to those. So as far as the financial statements go, we take the trial balance or the numbers of the city, and we perform a number of tests on those balances. We perform tests like we send out confirmations. We'll send out confirmations for cash, for debt, for property taxes, sales tax, other revenues that we can send out confirmations for, also for URS allocations and anything that we can think of to send a confirmation to make sure that the third party is their numbers match ours and that we're showing the right balances. During the audit, we pull a number of invoices. We'll pull a significant number of invoices at the beginning of the audit. We want to make sure that the invoice matches the check is posted to the right period, that it's posted in the right GL account. We also will pull invoices for things like fixed assets and other things as we're going through the individual audit procedures. And we also pull a number of invoices after the end of the year to make sure that the expense is posted in the right period. So if an expense happened in June, but we didn't pay for it until July, we want to make sure that expense is posted in the right year. So we'll pull those invoices to make sure accounts payable is correct. There's a number of calculations on a financial statement, things like depreciation expense, compensated absences, URS allocations, accrued payroll. And so we'll go through and we'll recalculate those balances to make sure they meet accounting standards. There's also analytical reviews that we do. We'll compare this year to last year. We'll do that at the beginning of the audit. We'll review those to make sure that we can understand what the differences are and what happened. As we're testing individual balances, we'll do that a second time. We'll compare that. For instance, if we're testing cash, we'll look at last year, this year, see if we can understand what happened and why the differences are. If we can't, then we obviously perform more tests and ask more questions to understand what happened and evaluate those. And then as the financial statements are being written, we'll do that at the final time, just kind of a high level to make sure we can understand where those differences are and if we've captured everything that we needed to. And then there's a number of other tests and procedures that we perform on the financial statements to make sure that they're materially correct, that they meet accounting standards and they can be relied upon. So through those evaluation, testing, and other procedures, our opinion is that the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, the business type activities, each major fund, and the aggregate remaining fund information of the city as of June 30, 2024, and the respective changes in financial position where applicable, and then cash flows thereof for the year and in accordance with accounting principles generally accepted in the United States of America. So that is a clean opinion. That is an unmodified opinion or the best opinion that you can. So in short, what that means is that we, through our evaluation and testing, we do feel that those financial statements are materially correct. The second thing that we do is we look at internal controls. We don't give an opinion on controls, but we do evaluate those controls to make sure that they're designed, that they're implemented, and that they're working. We do that through evaluations, interviews, questionnaires, walkthroughs. So as we're pulling invoices for some of those other areas, we'll also be looking to make sure that controls are being followed, and that the assets of the city are being protected. So if there's a portion of your city that didn't have controls, or those controls were just not working as effectively as they had been at one time, then we would bring that to your attention as a significant deficiency. Through our evaluations and testing this year, we did notice that there was one thing that we wanted to bring to your attention, and that was related to cash disbursements. And then mostly it's related to the fact that if, once an invoice has been processed and paid, if there's issues on the GL account, instead of going back and fixing the original coding, that we prepare a journal entry that has an audit trail of how that procedure, how that account was switched or moved to the proper account. So our recommendation is that we just put in procedures to require journal entry to coordinate changes to general ledger accounts. And those journal entries should be reviewed and approved by somebody outside of the function. So the or the city manager or somebody that can look at those entries and make sure that they're appropriate. That was the only finding. The rest of the internal controls we felt like were designed and implemented, and they were protecting your city. So there's no other issues in that small one. The third thing that we do is we look at state compliance. So the state auditor gives us certain areas to look at every year. And those are usually some of them are annually that we look at every year, and then some of them kind of rotate on a 2-year, 3-year basis. This year we looked at budgetary compliance, fund balance, restricted taxes, fraud risk assessment, government fees, cash management, and the tax levy recognition. So the state gives us certain procedures to perform. We go through those procedures and evaluate whether you're in compliance with those areas. So in this year, there was one issue where there was a couple of enterprise funds that we expended more than we had budgeted for. And that one gets that's a little bit hard sometimes with depreciation and other things that aren't really cash related, but are still required to be budgeted. We're just recommending that the city look at those and make sure that as we're going throughout the year, if funds are looking like they're going to exceed the expenditures, that we evaluate those and make necessary budget adjustments to make sure that we're in compliance and that we're not exceeding budgeted amounts.
Ron, can I jump in there really quick? So
sure, absolutely.
with the one you're talking about right now, which is a state requirement, and we had those 2 enterprise funds where we had the issue, and you just mentioned that these are non-cash disbursements or whatever, the depreciation. Can you explain like what that means? Because in the way I would explain it is I'd say, well, we have to put down that there's this expenditure, but it actually never leaves the revenue never comes in for it. It never goes out. It just is shown there, but it never actually depletes the fund by that same amount. Can you explain that in better terms?
Well, it's a non-cash. So if you're looking strictly on a cash basis, there's no cash that's going to be paid for it. What it's doing is that if you buy a piece of equipment, we say the life of that equipment is 5 years or 20 years, whatever the life is. And then we take a prorate share of that every year to depreciate that balance until basically at the end of the life, we're saying that asset has used up its useful life. So while yes, it doesn't affect your cash balance, it is an expense that is related on the financial statements. And what it's doing is allocating that cost over the life of the asset. So instead of picking up, buying a $50,000 piece of equipment and expensing it in the year you do it, you put it on the balance sheet as an asset, and then you depreciate it over those 20 years. And so you're picking up 1/20th every year as an expense.
Right. So
yes, it's not a cash related item, but it is on the financial statement.
Gotcha. So on these two items, or these 2 enterprise funds, were it not for the depreciation, we would not have been over on our expenses for these 2 enterprise funds. And so I just wanted to say that because
you're right.
Yeah, because technically, I mean, it does show the expenses are more than the revenues, but this expense doesn't go out. It doesn't matter. But I wanted to bring that up just to say that it wasn't like salaries or purchasing new vehicles or anything like that where cash actually left. And in future years, we definitely will have this depreciation in there. It was actually an issue for the last 2 years, I think, and that's why it didn't make it into the last the budget that we're in right now is because the year before, I think that line was blank and we were pulling everything forward, you know? So, so thanks for that explanation. And yes, we have already fixed it for this year. We've made a budget amendment. And so it won't be an issue in the audit that is done for this fiscal year.
Perfect. Okay. Yep. So that's really kind of my review. That's what we did in our conclusions. So happy to answer any other questions anybody has.
Yeah, and then the last thing I was going to say is just to reiterate that it is a clean opinion or an unmodified opinion, which is the best standard, right, for an audit?
Right. Yep.
Okay.
For sure.
Okay, Didar, did you have some questions?
Not really questions, but so there are on the statements, I add up some numbers, it didn't match, so I'm just gonna mention those are. Page 3 on the document, but the page 8 on the PDF is talk about the 9,004,887. So when I add the numbers, this to talk about of this amount must be spent, blah, blah, and then this one assigned for the blah, blah. So when I add those blah, blahs, there's $1,000 different. So it doesn't add up to
How many thousands?
1,000.
1,000? Okay,
Mhm.
I think we can fix that. That's
Yeah.
it could be a rounding thing if it's just $1,000.
That's a big rounding. That's
Are you talking about $100,000?
1,000.
Just $1,000. So, okay, we'll take a look at
I'm
that.
sorry, where are we looking on that? Can you
That's
tell me where
page
I see
3.
page 3,
And
ending
PDF 8.
numbers 9 million.
Yeah, it's the third,
Mm.
second bullet point under financial highlights.
Uh-huh. Reports combined fund balances of 9 million.
Yeah,
Are you saying
Yes.
those three added together don't add up to that 9 million?
yeah. If you subtract 1,953,970 and 3,303,942, the result isn't the same as what it says the remaining is.
It is off by $1,000. Okay.
Another one is like similar on the page 7, the PDF 12. And that one is on the top of the page is talking about the 9 million again and 42% of should be assigned and unassigned. So that one, when you add the numbers, this time is $100 is off. And then that also doesn't make 42%, it's make 36.7%.
Okay. All right, well, let's take a look at that too, Ron, if that's okay. That's page 7 on the report, page 12 on the PDF. It's the first paragraph.
Sure. Okay.
And I'm very minor again. I think I point that out last year that our insurance is talk about the city insurance being Cigna, which being changed for several years. Let's update this time to correct it what it is.
What page is, or is that it just throughout? Or is that on
It's
one
on the
page?
page 30. Well, let's see, PDF 38, report 32.
Okay. Page 38 has the wrong insurance
yeah.
provider for the city.
Report
And who is the
32.
provider now?
Page 32 on the report.
Oh,
Right,
Sorry. And then
who is the
PDF
correct provider?
38.
Or B.
PHP is what we have now. It
PHP.
says Cigna.
Okay. I'll definitely
That's
change that
fine.
for next year for sure.
Is that it?
I-
Wasn't too
I
bad.
mean, it was too hard to do the rest of the table. I couldn't plug in, so I'm hoping the
Well,
all the tables are correct.
I think tables are most likely correct. I think, thanks for pointing those out. Sounds like there are some discrepancies, but they're not in the millions or hundreds of thousands of
yeah.
dollars. So we can figure that out. So whatever the result is, isn't going to affect the bottom line too much, I don't think. So any other questions or comments or anything? Okay, Ron, any last words for us?
No, just, thank you. Thanks for letting me be involved with your city, and, thanks for your staff. I know it's a big process with a lot of information that gets thrown around. We're grateful for the hard work of you guys, and grateful to be a part of it. So thank you.
Yeah, I'll just say really quick, Ron's been very helpful, especially this year, because we've had a lot of questions. We've called him a lot and asked him several questions about history of budgets and things like that, and what best practices are going forward and everything. So, and you've been great. We really appreciate your help on these things, and you'll be able to make it to the city council meeting, right?
When is that?
24th of March.
March 24th. And I promise I'll have a computer that works. So is it electronically okay if I get to the right? All right. And what time on the 24th?
Well,
Not sure.
yeah, I think logging on at 6 will be fine. Yeah,
6, okay.
and we'll try to get it to the front of the meeting. So,
Okay.
okay. Any other discussion about the reported or the budget report? Okay. Then, if we have a motion, I think what we do is recommend approval of this motion or this report to the city council.
I'll let one of you guys do it.
With the correction of those numbers?
Yes. Well, I don't know that they'll be corrected for the report for March 24th. Ron, correct me if I'm wrong, but I think we can make note of the Cigna, the other two numerical changes. I don't think will affect, like I said, the bottom line. Do we need to have them changed for the budget meeting, or how do you want to do that?
I mean, I can if you'd like me to.
Not the budget meeting, I'm sorry. Sorry, I interrupted.
Yeah,
I said the wrong thing. So go ahead.
I can definitely make the changes on those pages. They're not, these are, on these pages, these are just highlights and discussion items. They're not actually the opinions part where we're actually giving opinions on. This is just some additional information, but yes, I can make those changes and I can send you those new pages if you want to, and you can add them to the PDF.
Let's make those changes, just so that we know that there isn't something that is incorrect in the document when we present it to the city council. And it sounds like it won't be too difficult to do that, hopefully. And then
you have a PDF, so I'm just going to send you the pages, and you can just insert those pages into that PDF and then resend it out.
Sounds good. Sounds good.
Okay.
So yeah, the motion. Sorry, Ron, did you have something else?
Nope.
Okay.
Good.
So if we're gonna make a recommendation on this motion for the city council to approve, the motion would be to forward a recommendation of approval for the present to the audit as presented with the changes that were discussed, and that's pretty much it.
I'm gonna give it a try. I make the motion to recommend the draft annual audit to the city council with the changes we discuss.
Recommend approval.
Recommended approval.
Okay. Okay, you have a second?
I'll second.
Okay, thank you. So we have a motion and a second. All in favor?
I
We don't have to do roll call or anything like that. Okay, that was 3 for 3. That's unanimous. So it is recommended to the city council for approval. So I believe that is it. Anything else from anybody? There's nothing else on the agenda. So do I need a motion? Well, I adjourn this meeting.
thank you.
You're welcome.